Luck gets the credit, discipline does the work. Most people look at millionaire investors and assume fortune smiled on them, that they were in the right place at the right time with the right stock. But ask anyone who's been in the game long enough and they'll tell you luck is timing, but habit is survival. The real story isn't about one winning trade. It's about the 10,000 disciplined decisions that came before it. The 1% aren't chasing luck. They're engineering consistency. They know that luck occasionally opens a door, but only discipline keeps it from slamming shut. The myth of luck comforts the lazy. The truth of habit exposes the committed. Every millionaire investor follows a rhythm invisible to outsiders. You can't see it in their Instagram stories or highlight reels. It's hidden in what they don't do. They don't skip routines because they're tired. They don't chase trends because they're bored. They repeat the same boring systems that compound into extraordinary results. The pattern looks ordinary: consistent journaling, data reviews, quiet analysis, and fewer emotional decisions. But that's the paradox. Wealth hides inside the ordinary, repeated long enough to become extraordinary. They play the same melody while everyone else changes songs every week. Focus is the millionaire's multiplier. When most people chase every opportunity, the 1% narrow theirs to one or two core strengths and squeeze everything out of them. They know divided focus compounds confusion, not results. Every time you switch directions, you reset your compounding clock. The rich play a different game. They specialize, automate, and double down. Instead of chasing more, they sharpen less. Over time, this tunnel vision becomes rocket fuel. The world sees obsession. They see leverage. The average person dabbles in 10 things and masters none. The millionaire masters one and builds an empire around it. The average investor thinks success comes from knowing the market. The millionaire knows it comes from knowing themselves. They've studied their own fear, greed, impatience, and bias more than any company's earnings report. They know emotion is the invisible variable in every portfolio, and it's the one most people never calculate. When everyone else trades from panic or euphoria, they trade from plan. Their calm isn't natural, it's trained. They've learned to sit in discomfort until logic returns, because markets don't move on information, they move on emotion, and whoever controls their own controls the outcome. Millionaire investors aren't adrenaline junkies, they're masters of monotony. While others chase new systems, they refine old ones. While others reinvent, they reinforce. The 1% don't crave excitement from the market. They crave reliability from themselves. They've learned that every time you change your approach for stimulation, you break your own compounding. So they design their process to feel repetitive on purpose, because boredom breeds focus. What looks dull to outsiders is deeply profitable in the long run. The market rewards consistency the same way nature rewards patience. Quietly, relentlessly, and only after everyone else gives up. The best investors spend more time reviewing than reacting. They don't just track profits, they study patterns. What worked, what didn't, what emotion crept in. Reflection is their risk management tool. It's how they prevent small mistakes from becoming big ones. They know every loss contains data, and every data point, when studied, buys wisdom at a discount. The daily review habit builds emotional clarity. It forces awareness before arrogance takes root, because the truth is, you can't improve what you don't measure. Millionaires don't worship results, they worship refinement. Millionaires protect their energy like it's a currency, because it is. They track where their attention goes, who drains it, and what fuels it. They've learned that every distraction is an expense, and every focus block is an investment. They build routines that preserve energy for decisions that matter. That means fewer tabs, fewer meetings, fewer notifications, and more stillness. Their secret weapon isn't hustle, it's energy allocation. Because success isn't about doing more. It's about doing what matters most with the most focus possible. They don't burn out because they budget their attention the way others budget money. Humility is the millionaire's armor. It protects them from the deadliest force in investing, ego. Most investors lose money not because they're uninformed, but because they can't admit they're wrong. The wealthy learn early that arrogance is expensive. They let the market humble them before it humiliates them. That means cutting losses quickly, questioning their assumptions, and seeking truth over validation. Humility keeps them liquid, mentally and financially. They don't need to be right, they need to grow. And that's the quiet paradox. The less they try to look smart, the smarter their decisions become. The market rewards those who learn faster, not those who defend harder. Millionaires aren't fearless, they're precise. They know that every yes carries an invisible cost. Every trade, every investment, every new venture steals bandwidth. That's why they say no more than anyone else. Risk management isn't about avoiding loss, it's about preserving focus. They use strict filters, only betting where the risk is defined, the downside is survivable, and the upside is asymmetric. They think like chess players. Every move must earn its space on the board. While others romanticize risk-taking, the 1% romanticize risk discipline. They understand that protecting your capital is the first step to multiplying it. The richest minds stay curious long after others stop learning. They never assume they've figured it out. They explore industries outside their circle, read uncomfortable opinions, and study people they disagree with. Curiosity keeps their edge sharp because markets evolve, and yesterday's truth can become today's trap. The millionaire habit isn't knowing everything, it's wanting to know more. Curiosity compounds just like money. The more you feed it, the faster it grows. It keeps them nimble, adaptive, and open to innovation. When others grow rigid with experience, they stay flexible with questions. That's how they stay ahead, by staying fascinated. Emotions scream, data whispers. Millionaire investors have trained themselves to hear the whispers. They review numbers, not narratives. Every mistake becomes a lesson logged, not a wound ignored. They build systems that turn feedback into fuel, dashboards, notes, performance metrics. While others spiral into drama after a loss, they zoom out and ask, what is this trying to teach me? The market speaks to everyone, but only the disciplined listen. Over time, their data-driven humility compounds into predictive intuition. They stop guessing and start anticipating, because patterns emerge when emotion fades. That's how they turn volatility into an advantage. Impulses cost fortunes, reflection creates them. The 1% practice what they call the 24-hour rule. When emotion runs high, fear, greed, excitement, panic, they don't act, they wait. 24 hours later, the feeling fades and reason returns. They know temporary emotion can cause permanent damage. One bad trade made in anger can erase a decade of progress. So they build a delay mechanism into their process. They journal their initial reaction, let the dust settle, then decide. It's not weakness, it's wisdom, because the best time to act is rarely when you feel like acting. It's when the feeling is gone and clarity is back. The real test isn't surviving downturns, it's surviving dullness. Millionaire investors master the art of waiting. They sit through months where nothing happens, while everyone else loses patience. They know wealth grows quietly in the background, not in the noise. So they build rituals that keep them grounded during the silence. Reading, analyzing, exercising, reflecting. Boredom isn't their enemy, it's their moat. because when the impatient sell, the disciplined stay. They've learned that success feels uneventful most of the time, and that's the point. The 1% don't need excitement from the market. They get satisfaction from progress others can't see. Habits thrive or die based on environment. Millionaire investors curate theirs like architects. They design physical, digital, and social spaces that align with their goals. Their desks are clean, their phones are quiet, and their circles are curated. They don't hang around chaos because chaos rewires focus. The people they spend time with are strategic mirrors. They reflect logic, not drama. The environment does 80% of the work. Discipline just executes it. The 1% know willpower is unreliable, but design is dependable. So they engineer surroundings that make good habits automatic and bad habits inconvenient. Millionaires take distance seriously. They schedule solitude like others schedule meetings. Walking away isn't avoidance, it's maintenance. They understand that clarity doesn't happen while scrolling charts or staring at numbers. It happens in silence. Stepping back resets emotional calibration. It allows perspective to re-enter the room. That's why some of the best ideas appear while exercising, traveling, or doing nothing at all. The disconnect habit protects them from mental fatigue and tunnel vision. The poor chase stimulation to escape boredom. The rich seek stillness to stay sharp. Clarity is found, not forced, and the wealthy make space to find it. The public loves grand gestures, quitting jobs, buying mansions, announcing retirements at 35, but the 1% understand that the architecture of wealth is built on invisible bricks, micro-disciplines repeated without applause. It's the habit of reviewing your trades every night, even when you're tired. It's waking up early, not because you have to, but because the silence before the world wakes is the most valuable real estate for thought. It's logging your spending when no one's watching, reading one more paragraph when your brain wants to scroll, closing the laptop after a loss instead of doubling down for revenge. These aren't impressive moments, they're microscopic ones, but that's where the real separation begins, in the small margins where discipline is inconvenient, yet you choose it anyway. Millionaire investors treat small disciplines like interest payments on a moral debt to their future self. Every act of restraint, every moment of focus, every uncomfortable choice is a deposit into a compounding account of integrity. And the funny thing, it's not glamorous. No one claps when you resist an impulse buy or hold your position through fear. But over time, those moments of control harden into character, and character shapes destiny. The difference between someone who makes $1 million and someone who loses $1 million often comes down to how they handle a Tuesday morning when nothing exciting is happening. The 1% don't rely on massive acts of willpower, and they rely on microscopic consistency. They know small hinges swing big doors. Because discipline doesn't demand intensity, it demands continuity. The rich are rarely the most talented. They're the most consistently self-controlled, and that's what micro-discipline really is. The quiet daily handshake between who you are now and who you're becoming. There's a reason the greatest investors are obsessive note-takers. Buffett, Munger, Dalio, every one of them has spent decades documenting their thoughts because they understand something few others do. Memory lies, emotion distorts, but paper never forgets. Writing forces reflection. It's not just about record keeping, it's a mirror for the mind. Millionaire investors use writing to externalize emotion, to drain greed, panic, and excitement out of their heads and into ink, where those feelings can't hijack their next decision. When you write down what you think you know, you expose the difference between assumption and analysis. That's how clarity is built. not by consuming more information, but by processing it through articulation. They don't write to sound smart, they write to stay sane, because markets have a way of bending perception. In the heat of volatility, you forget what you believed last week, but a journal doesn't. It humbles you. It shows you the patterns you try to ignore, the emotional cycles you repeat. You start seeing that every loss wasn't random. It was a replay of behavior you failed to correct. That awareness transforms into strategy. Over time, their notebooks become archives of wisdom, market lessons, psychological triggers, and tiny calibrations that sharpen decision-making like a blade honed 1,000 times. More importantly, writing helps them slow down. The pen becomes a friction point against impulsivity, because you can't journal and panic at the same time. When you're writing, you're thinking. When you're thinking, you're observing. And when you're observing, you're in control. That's why every serious investor eventually develops a ritual of documentation. Whether it's a notebook, a spreadsheet, or a private letter to themselves, writing is the bridge between awareness and mastery. You can't manage what you don't measure, and you can't improve what you refuse to admit. The wealthy don't just study markets, they study themselves. Writing is how they collect data on the one variable that matters most, their own mind. Ego kills more investors than bear markets ever could. It's invisible, seductive, and worst of all, it feels like confidence. That's why it's so dangerous. The 1% have learned to regularly detox from their own success, because they know the higher you climb, the easier it becomes to mistake luck for skill. Early wins inflate perception. They whisper lies. You've got this figured out. You're different. You're untouchable. That's how fortunes evaporate. Ego convinces you that risk management is for other people. It makes you double down when you should scale back. It blinds you to the slow decay of discipline because you're too busy admiring your own reflection. The antidote? Beginner's mindset. The mental flexibility to stay curious even when you're competent. The 1% make humility a ritual. They seek mentorship from people younger than them. They ask dumb questions on purpose. They reread beginner material they once mastered just to notice what they now overlook. They don't cling to identity. I'm a trader. I'm a tech investor. I'm a real estate guy. They let go of labels because labels limit learning. Ego wants to be right. Growth wants to be accurate. Millionaire investors choose accuracy. That's why they evolve when others stagnate. To detox the ego, they build systems that check them. Accountability partners, risk caps, regular reviews, and even scheduled breaks from the market to reset perspective. They welcome correction instead of resisting it, because every moment you think you're too good to fail, you're already failing. Confidence without calibration turns into arrogance, and arrogance is silent self-destruction. Staying a beginner means staying open, not naive but teachable. The most dangerous phrase in wealth creation is, "I already know." The richest minds operate like explorers, perpetually curious, perpetually cautious, perpetually refining. Ego craves arrival. Wisdom lives in evolution. And the moment you think you've arrived, you've already stopped moving. Most people think success comes from routines, but routines are mechanical. They're what you do. Rituals are emotional. They're why you do it. That's the distinction that separates burnout from devotion. Millionaire investors don't just check boxes. They treat their daily actions as a sacred rhythm, a recurring conversation with their future self. Their morning isn't a checklist of wake, read, trade. It's a quiet ceremony that reminds them, I'm responsible for how my day unfolds. Rituals anchor behavior to meaning. They convert consistency into identity, and that's why they last when motivation fades. To outsiders, these rituals look ordinary: a morning journal, a 15-minute silence before opening charts, a habit of saying thank you after every profitable day, no matter how small. But the intention behind them transforms the mundane into the magnetic. Rituals are what convert discipline into peace, because you can't sustain what feels forced, but you can sustain what feels sacred. The wealthy have discovered that the reason most people abandon good habits isn't lack of discipline, it's lack of connection. When you make the process meaningful, the effort stops feeling like effort. They build rituals around their investing too, reviewing data every Friday at the same hour, regardless of wins or losses, writing letters to themselves before large trades to test conviction, conducting post-analysis meetings alone as if presenting to an invisible board of accountability. These aren't superstitions, they're stabilizers. Rituals give emotion a place to go. When fear spikes, rituals remind them they've been here before. When greed tempts them, rituals slow them down. They transform chaos into choreography. And that's why wealthy investors rarely crumble under stress. Their rituals absorb shock. They create rhythm in randomness. Because the markets are unpredictable, but your process doesn't have to be. Over time, these rituals become second nature, a set of behaviors that no longer require willpower because they've fused with identity. The poor rely on motivation, the rich rely on rhythm. That's the difference between habit and heritage. Routines create momentum, rituals create mastery. The millionaire doesn't wake up hoping for clarity. Their ritual guarantees it. In the end, building rituals is about transforming behavior into belief. You're not just performing actions, you're rehearsing who you're becoming. Every morning ritual whispers to the brain, you are the kind of person who moves with purpose. Every repeated act of reflection says, you are the kind of investor who values awareness over emotion, and eventually the self-image aligns. The external results, the growth, the wealth, the composure, become a reflection of an internal rhythm that never breaks. That's why the 1% don't chase balance. They build it one ritual at a time. The connection between health and wealth isn't motivational fluff. It's neurochemical truth. The 1% know that every financial decision is a biological one first. When your sleep is poor, your cortisol spikes, your blood sugar swings, and your decision-making collapses. You can't manage money if your brain is misfiring. That's why millionaire investors treat their bodies like strategic assets, because they are. While the average investor obsesses over market volatility, the wealthy obsess over their own stability. They understand that energy, not time, is the real capital of life. You can have 24 hours in a day, but if you're tired for 10 of them, you're already broke. They guard their physical and mental energy like it's part of their portfolio. That means sleep becomes non-negotiable. Exercise isn't vanity. It's neurochemical investment. Nutrition isn't aesthetics. It's emotional regulation. Every healthy choice compounds into sharper perception, better focus, and calmer reactions. Because when your body's chemistry is chaotic, every fluctuation in the market feels personal. The smallest dip triggers panic. The smallest rise inflates ego. But when your body is balanced, your mind stops overreacting. You see clearly, you act rationally, you recover faster. The wealthy have internalized a principle most ignore. Your nervous system is your strategy. They don't drink to escape, they rest to recover. They don't grind through exhaustion. They respect the diminishing returns of fatigue. A tired brain sees threats everywhere. A nourished one sees opportunity. It's not about being superhuman, it's about being available. Availability, mentally, emotionally, and physically, is what lets them capitalize when others are collapsing. And that's why the best investors move slower when they need to. They step away, reset, and return with clean perception. The irony is that the health-wealth link is the most ignored wealth-building secret of all, because it's not glamorous. There's no viral quote about 8 hours of sleep, and there's no bragging right in saying, I stayed hydrated and stretched. But these small acts protect the instrument through which all wealth is filtered, the brain. When your brain operates with clarity, patience, and precision, every decision, from trades to partnerships, improves. That's why the 1% schedule recovery the same way they schedule meetings, because their health isn't a side project, it's infrastructure. The wealthy think of their body like a private hedge fund. It yields returns only when managed intelligently. They minimize inflammation, optimize rest, and maintain routines that sharpen awareness. When they meditate, they aren't being spiritual. They're tuning their internal signals. When they eat clean, they aren't chasing a trend. They're reducing cognitive noise. Every choice is data-driven, because you can't build generational wealth if your daily chemistry keeps working against you. The 1% live by a rule most never learn. If your body fails, your strategy fails. Period. Patience is the rarest skill in investing because it's invisible. You can't post it, you can't flex it. It looks like inactivity, and that's why almost no one practices it. But millionaire investors know that patience isn't waiting, it's positioning. It's the deliberate act of holding your focus when the crowd panics. It's staying calm when volatility feels personal. It's letting compound interest, human behavior, and market cycles do their job while you refuse to interfere. The 1% don't think in days or even years. They think in seasons, decades, sometimes generations. That temporal distance gives them an emotional edge that money can't buy. Patience isn't passive, it's strategic restraint. It's the ability to absorb boredom and uncertainty without flinching. That's the real flex. The average investor craves stimulation. They need constant motion to feel progress, but the millionaire treats stillness as strategy. They understand that the market rewards the calm observer, not the anxious actor. So they train patience like a muscle. They journal during stagnation. They set clear time horizons before entering any position. They deliberately desensitize themselves to short-term noise. Every time they resist reacting, they're strengthening that muscle, building emotional endurance for moments that destroy others. And the deeper truth, patience is trust, not in the market, but in yourself. It's confidence in your analysis, your system, your ability to sit through storms without sabotaging the process. Millionaires have seen enough cycles to know that panic is expensive and peace is profitable. They don't measure success by speed, they measure it by stability, because speed without control leads to destruction. So they cultivate a slow confidence, a still intensity. They're not trying to beat time, they're aligning with it. Most people misunderstand patience because they confuse it with doing nothing, but in reality, patience is preparation disguised as pause. It's what allows investors to be fully ready when the moment finally arrives. The market, like nature, tests for worthiness. It rewards those who can wait without losing enthusiasm. That's why the 1% treat time like a partner, not an opponent. They don't rush the harvest. They focus on the soil. Practicing patience doesn't make the process shorter. It makes it sustainable. It keeps emotions neutral, energy focused, and strategy consistent. Over the years, that calmness becomes compounding confidence, the kind that lets you thrive while others quit. Millionaire investors don't seek instant wins. They seek inevitable outcomes, and inevitability is built on patience. They've mastered the art of waiting intelligently, active reflection, silent recalibration, slow accumulation, because patience, when practiced deliberately, doesn't delay success, it guarantees it. The greatest threat to a successful investor isn't loss, it's victory. After a big win, chemistry betrays logic, dopamine floods, confidence swells, caution shrinks. The same discipline that built the fortune quietly dissolves. This is the winner's curse, the illusion that past performance guarantees future invincibility. The 1% treat every win like a potential infection. They celebrate briefly, then disinfect the ego. They audit what part of the gain was luck, what part was judgment, what part was timing. They ask, would this still have worked if the environment were different? Because they know success distorts perception faster than failure ever could. Failure humbles you immediately. Success flatters you slowly, and slow poison is harder to detect. That's why seasoned investors build ritualized humility right after triumphs. They downscale risk, review fundamentals, sometimes even take forced breaks. They understand that emotional overconfidence is leverage in disguise, magnifying mistakes under the illusion of mastery. The poor think success ends the game. The rich know it restarts it at a higher level with thinner margins for error. Their post-win discipline becomes the firewall that protects decades of progress. Avoiding the winner's curse means remembering that markets evolve, but ego doesn't. The same pattern that makes people lose everything in casinos applies to portfolios. You feel smarter when you're just luckier. Millionaire investors inoculate themselves through reflection, diversification, and dialogue with dissenters. They invite contradiction, especially after a streak, because truth hides in discomfort. They treat compliments like sugar, sweet but dangerous in excess. And above all, they remind themselves the goal isn't to be right, it's to stay solvent. That awareness is why they survive cycles others don't. In wealth creation, humility isn't virtue signaling, it's risk management. Every flight drifts off course. What keeps planes from vanishing isn't perfection, it's recalibration. Millionaire investors live by the same principle. They know no thesis, no model, no belief remains accurate forever. So they build feedback systems that confront them with truth, even when it's uncomfortable. Weekly reviews, performance dashboards, peer audits. All are mirrors showing whether their map still matches the terrain. The average person fears being wrong. The wealthy fear staying wrong. They measure reality more often than they measure ego. Calibration isn't about doubt, it's about discipline. Markets shift, technology evolves, consumer behavior mutates, and investors who cling to yesterday's certainty quietly decay. The 1% prize adaptability above pride. They update their assumptions the moment new data arrives, no matter how elegant the old narrative felt. They've learned that being attached to a thesis is emotional indulgence disguised as conviction. So they practice intellectual detachment, holding beliefs loosely enough to replace them quickly. That's not weakness, it's agility. This habit bleeds into every area of their life. They calibrate relationships, health, and even self-image. They ask, Is this still serving the mission? And if the answer is no, they pivot without guilt. That's how they avoid the sunk cost trap that enslaves so many dreamers. The obsession with justifying old choices instead of optimizing new ones. To them, admitting error isn't confession, it's evolution. Reality pays those who align with it fastest. Calibration also requires brutal honesty. You can't adjust a compass you refuse to read. That's why millionaire investors document metrics publicly within their teams, letting numbers shame bias. If returns dip, they don't spin stories, they dissect systems. Their pride lives in precision, not perfection, because in finance, like in aviation, deviation is inevitable, crashing is optional. Constant calibration keeps them flying straight long after others stall. In an age where information is infinite, wisdom is endangered. Most investors drown not from lack of data, but from overconsumption. They mistake noise for knowledge and headlines for insight. Millionaire investors curate what enters their minds with the same scrutiny they apply to their portfolios. They understand attention is allocation. Every article, tweet, or video you consume takes up mental real estate that could house better judgment. So they fast from distraction like athletes before a fight. They read selectively, follow few voices, and verify before believing. Their information diet follows 3 rules: intentionality, filtration, and digestion. First, they consume with intent. Every input must serve a strategic question. Second, they filter by credibility, not popularity. They value long-form analysis over viral opinions because depth compounds accuracy. Third, they translate information into understanding through journaling or discussion. Knowledge that isn't processed becomes clutter. Processed knowledge becomes capital. They're also aware that media runs on fear. Every outlet profits from outrage cycles that hijack cortisol, so they design buffers: no financial news before markets open, limited screen time after losses, silence on weekends. They treat emotional hygiene like risk management because exposure to panic is contagious and mental contagion erodes decision quality. The 1% aren't uninformed, they're selectively informed. They trade stimulation for synthesis. Over time, this minimalism turns into mental compounding, while others waste bandwidth reacting to every rumor. The wealthy accumulate clarity. Their minds remain calm, unfragmented, focused on fundamentals. And clarity, like cash, earns interest when protected. That's why they view curiosity as an investment, but consumption as an expense. The information diet isn't about isolation, it's about insulation, keeping your internal environment cleaner than the external one. Because in a world shouting for attention, silence becomes the ultimate competitive advantage. Millionaire investors rarely chase radical transformation. They engineer incremental inevitability. Their secret weapon is the 1% rule, the belief that improving by just 1% daily outpaces any burst of motivation. It sounds small, but compounding turns that 1% into an avalanche. The 1% no time is the ultimate magnifier. Consistent micro-improvement for a decade beats short-term genius that burns out in a month. They've learned that skill compounds faster than capital, and discipline compounds faster than luck. They treat growth like interest, predictable, unexciting, unstoppable. They don't try to reinvent themselves every January. They simply add precision to yesterday's system. One better trade review, one extra question asked, one less emotional reaction. Over time, those minor edges stack until outsiders call it talent. But it isn't talent, it's arithmetic. 1% of refinement repeated long enough becomes mastery that looks miraculous only to those who never track the math. The 1% rule also protects them from paralysis, because when your goal is small, resistance has no teeth. Big dreams intimidate, small improvements invite action. That's how the wealthy maintain momentum even in chaos. By narrowing focus until success feels inevitable, they measure progress, not perfection. They reward the trend line, not the headline. When a day goes badly, they simply ask, did I learn? Did I stay consistent? If the answer is yes, the curve still points upward. Over decades, this micro-compounding builds not only fortune but serenity. They trust that 1,000 modest victories will dwarf one lucky break. The 1% rule keeps them grounded, patient, immune to hype, because they understand greatness isn't explosive, it's accretive. Paradoxically, the people most defined by discipline also know when to destroy it. Millionaire investors build systems strong enough to run without emotion, then periodically dismantle those systems to keep from becoming mechanical. They've seen how success hardens into routine, and routine quietly calcifies into blindness. The market changes, technology shifts, psychology evolves. What once worked can become a trap. So they practice the anti-habit, deliberate disruption. Every few months they audit their rituals the way engineers stress test a bridge. They ask, is this still effective or just familiar? If the answer leans toward comfort, they inject volatility, new mentors, foreign markets, unfamiliar books, opposite viewpoints. This shock therapy resets perception, because the moment a habit becomes unconscious, feedback stops reaching awareness. The anti-habit revives sensitivity. They also vary environment to trigger fresh neural connections. A week working abroad, a day trading from a park instead of an office, silent retreats with no screens. These interruptions aren't escapes, they're recalibrations. By breaking routine intentionally, they prevent stagnation accidentally. The wealthy understand that the enemy of mastery isn't ignorance, it's inertia. Average investors chase stability so desperately they smother adaptability. The 1% invites friction to stay flexible. They redesign processes the moment they sense autopilot. They switch analytical frameworks, rotate asset classes, or challenge core assumptions just to watch how their mind reacts. That discomfort reteaches humility and creativity, the twin fuels of reinvention. Ultimately, the anti-habit keeps them alive inside their expertise. It forces consciousness back into behavior, because repetition without awareness breeds arrogance, and arrogance breeds extinction. The market punishes certainty. It rewards curiosity dressed as discipline. The 1% use consistency to build systems, and disruption to keep those systems human. Money doesn't change you, it magnifies you. The 1% learned this early, often the hard way. Before wealth, insecurities hide behind excuses. After wealth, they stand under spotlights. If you're impatient, money amplifies your recklessness. If you're generous, it magnifies your impact. That's why millionaire investors treat every financial result as psychological feedback. Their portfolio is a mirror reflecting discipline, clarity, and restraint, or the lack of it. They study their spending the way scientists study data, not to judge, but to diagnose. Every unnecessary purchase reveals a moment of emotional leakage. Every rushed investment exposes unresolved fear. They know markets move like emotions because markets are emotions, aggregated, scaled, and priced. Managing capital becomes an exercise in managing character. This is why personal growth isn't optional, it's operational. The wealthy invest as much in therapy, coaching, or introspection as they do in equities. They're not searching for peace and profit. They're aligning profit with peace, because wealth without self-awareness is volatility with a credit limit. They don't chase bigger numbers. They chase cleaner motives. When decisions come from grounded intention instead of anxiety, returns stabilize almost magically. The mirror principle also governs relationships. They notice how people respond to their success, envy, support, manipulation, and use that feedback to refine their circle. Money reveals integrity faster than words. Those who cheer for you only when you're struggling are allies of your limitation. The 1% cure at proximity relentlessly because they understand emotional contagion outperforms economic logic. Ultimately, they view wealth as a teacher, one that never stops grading. The lesson is always the same. Money expands what already exists. So they focus less on acquiring and more on becoming someone worth amplifying. When you fix the reflection, the mirror multiplies beauty. When you ignore it, it magnifies flaws. Millionaire investors don't worship money. They read it as feedback from life itself, telling them exactly who they are becoming. Starting is easy, finishing is rare. Most investors, entrepreneurs, and dreamers drown in unfinished momentum. They fall in love with beginnings, the spark of possibility, the dopamine of progress, but lose devotion before results arrive. Millionaire investors reverse that psychology. They worship closure. To them, a finished process is the only proof of discipline worth celebrating. They know that incomplete projects drain energy invisibly. Every open loop taxes focus and confidence. So they treat completion as a performance metric. One project done is worth 10 in motion. Finishing isn't about speed, it's about honoring intention. Every time they complete what they started, they reinforce self-trust, the compound interest of execution, because wealth isn't built from ideas, it's built from decisions concluded. The 1% move projects across the finish line even when motivation fades, because they understand momentum doesn't come from excitement, it comes from closure. They document, debrief, and de-stress after completion to extract lessons before chasing the next thrill. That feedback loop transforms repetition into refinement. Their discipline to finish extends to everything: closing losing positions, finalizing reports, ending unproductive partnerships. They refuse to linger in limbo. Why? Because indecision is the most expensive habit on earth. It burns time and compounds uncertainty. Millionaire investors act decisively not because they're reckless, but because unfinished actions multiply entropy. Completion creates clarity. Clarity compounds power. They even practice symbolic finishing, ending each week with reflection, cleaning desks, reconciling trades, clearing inboxes, tiny acts that signal to the subconscious. The cycle is complete, rest is earned. That mental punctuation resets confidence. The average investor searches for motivation, the wealthy search for conclusion, because nothing builds momentum faster than the satisfaction of something truly done. Finishing converts chaos into feedback, feedback into precision, precision into wealth. In the long game, consistency doesn't belong to those who start fastest. It belongs to those who finish longest. Every breakthrough begins with subtraction. The 1% understand that the brain, like a hard drive, must be cleared before it can evolve. Most investors cling to outdated frameworks that once worked but no longer fit modern markets. They stay loyal to strategies that earn them validation even when those strategies quietly decay. The wealthy treat knowledge as software. They update it relentlessly. They ask, "What if I'm wrong now?" and mean it. Unlearning isn't forgetting, it's deconditioning. It's uninstalling assumptions that limit perception. The 1% scheduled cognitive spring cleaning, reviewing principles quarterly, rereading books that once shaped them just to see what no longer applies, debating peers to expose blind spots. They don't confuse consistency with correctness. When new data emerges, they pivot without emotional mourning. Their identity lives in curiosity, not certainty. This willingness to unlearn keeps them ahead of trends. While others defend reputations, they evolve methods. They study new asset classes, experiment with technology, and allow youth to teach them fresh paradigms. They would rather appear uncertain for a month than irrelevant for a decade. Ego resists unlearning because it equates changing mind with losing face. But the wealthy see adaptation as authority. They know credibility comes from accuracy, not stubbornness. Unlearning also applies internally. They release limiting stories. I'm bad with risk. I'm not creative. I always lose late. These aren't facts, they're outdated identities. They rewrite self-definitions as conditions shift. That's why millionaire investors age like scientists, not relics. Each decade they shed one version of themselves to make room for a sharper one. Progress isn't additive, it's eliminative. You don't grow by stacking truths, you grow by deleting lies. The 1% live lighter because they refuse to carry expired certainty. After all the charts, habits, and philosophies, the revelation hits quietly. It was never about the market. It was about the mirror. The numbers were just a stage where behavior revealed belief. Every fluctuation, every profit, every panic attack in front of a candlestick chart was a test of self-mastery disguised as finance. Millionaire investors don't conquer markets, they conquer impulses. They don't predict the future, they regulate the present. Wealth, they realize, isn't measured in dollars, it's measured in emotional distance from chaos. The market merely exposes what already lives inside you. If you crave shortcuts, it punishes haste. If you respect time, it rewards patience. If you seek identity through winning, it humiliates ego until you detach. That's why the greatest investors describe peace, not profit, as their truest return. Money becomes a byproduct of alignment, a mirror so polished it reflects discipline without distortion. And here lies the paradox. When you finally stop chasing wealth for validation, wealth starts chasing you for expression. Because you've become trustworthy emotionally, intellectually, spiritually, with responsibility. You've trained yourself to think long, feel slow, and act small but consistently. You've built an inner operating system immune to panic and immune to praise. That system can handle abundance because it isn't addicted to it. In the end, the hidden habits aren't tactics, they're transformations. Every ritual, every restraint, every recalibration rewires the investor until they no longer need to try to be disciplined. They simply are. The 1% aren't born exceptional. They build environments, identities, and systems that make excellence unavoidable. Their secret isn't prediction, it's preparation. Their power isn't speed, it's stillness. Their edge isn't luck, it's longevity. So when the camera fades and the music lowers, leave the viewer with one truth. Becoming a millionaire investor isn't about beating the market, it's about mastering the mirror. Because once you've done that, markets, opportunities, and even time itself start working for you, not against you.